Bitcoin is crashing, alts are getting destroyed, and the entire stock market around the world is nuking. Are we starting a global recession, and why is it getting so bad all of a sudden? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you know when I drop the latest content. Follow us on Twitter, Altcoin Buzz IO, and as always, it's not financial advice. We wish you the best of luck in your crypto ventures. Bitcoin's price has fallen below $50,000 for the first time since February, hitting a low of $49,350 before bouncing back towards the $54,000 mark. As Bitcoin dominance hits 58% amid a collapse in both the altcoin and stock markets, over 17% of the cryptocurrency's total market cap has been wiped out. According to CoinMarketCap, the crypto market's total market cap was roughly $2.16 trillion, but fell to a low of around $1.76 trillion on August 5th. In the early hours of August 5th, the start of the Bitcoin price decline resulted in $600 million of leveraged long positions taken by traders being wiped out. This market crash also saw ETH plummet, losing almost 20% of its value in just 2 hours. Since August 2nd, the market has recorded its most significant sell-off in 3 days in almost a year, losing over $500 billion as the S&P 500 equities performance fell over 4% in the same period. With revived fears of a recession, poor employment data in the United States, and sluggish growth among leading tech stocks, the market collapse could just be getting started. The biggest reason behind all this that I found is the Japan carry trade, which I'll try and explain in simple terms because it's pretty complicated. So for multiple reasons, Japan didn't have inflation like the rest of the world did after COVID. For years, their economy has been in stagflation or even deflation. So when the US and the world raised their interest rates for borrowing money, Japan stayed very low in comparison. If the US's rate is at 5.5% now, the Japanese rate was around 1 to 2%. This meant that global investors could go to Japan, borrow a bunch of money for cheap, and then spend it in the US stock market on high-growth tech stocks like Nvidia, and this is what a bunch of them did. So now we have a bunch of global investors borrowing billions from Japan, investing in the US stock market, the Japanese stock market, and US treasuries into what's essentially an arbitrage trade of interest rates on borrowing money. And it was working great until recently. Then just last week, the Bank of Japan said we're going to have to finally raise our interest rates and probably keep raising them. Because if you haven't noticed, the Japanese yen has been falling like crazy. So now global investors are dumping their US stocks, Japanese stocks, or whatever they bought in order to pay back the Japanese loans. Meanwhile, Japan is also selling assets in order to save their own Japanese yen, which has caused this global sell-off we're seeing. If you look at the Japanese stock market, it looks like Terra Luna collapsing. It's down 30% in a few weeks, which is insane for such a large market. Even the COVID crash wasn't as bad for them compared to this. So this week will be very important to see how the Fed and the Japanese government react to all this, but unlike us, Japan can't print money like the US. The US Fed could cut interest rates sooner than expected and bring monetary easing. However, the Fed's main priority is getting inflation down. They don't care about causing recession as much because they believe recessions are a healthy reset. So it's hard to say right now what exactly Jerome Powell will do. Now, all of this has caused a sell-off in TradFi markets, but it's also spilled over heavily into crypto. Making it even worse is a massive market maker, Jump Crypto, decided to liquidate all their holdings on a very illiquid Sunday. Data from blockchain analytics platform Spot On Chain indicate that in the last 24 hours alone, Jump Crypto has moved 17,576 ETH, or over $46 million to exchanges like Binance, OKX, Coinbase, Bybit, and Gate.io. The latest transfer brings Jump Crypto's total exchange deposits to over $277 million worth of Ether over the past 10 days. Currently, Jump Crypto holds around $706 million in cryptocurrencies, including USDT, USDC, Bitcoin, and others. As Dr. Julian Hosp writes on X, the reason for the crazy crypto sell-off seems to be jump trading, who are either getting margin called in the traditional markets and need liquidity over the weekend, or they're exiting the crypto business due to regulatory reasons, Terra Luna related. The sell-off is relentless at the moment. In June, the Commodities Futures Trading Commission, or CFTC, began probing Jump Crypto. The investigation is focused on the firm's trading and investment activities, which include being deeply embedded in the crypto industry through its market making and investment arms. Launched in September 2021, Jump Crypto has faced setbacks, such as a $325 million wormhole hack in 2022 and substantial losses from the FTX collapse. Recently, Jump Crypto was also named in the Securities and Exchange Commission's lawsuit against Terraform Labs, although it was not charged with any wrongdoing. As Raoul Paul writes, this big, sloppy range of the majors is really due to the massive supply changing hands from last cycle and longer ago problems. The FTX estate, Mt. Gox, Germany, GBTC, and now Jump, plus new project unlocks and tokens. This too shall pass, and all the major overhang will soon be digested. As we know, Germany dumped billions in Bitcoin last month, Mt. Gox saw repayments after 10 years, Genesis has now moved $1.5 billion in Bitcoin and ETH to repay creditors, and FTX is doing the same with $8 billion. So on top of the global traditional market issues, we have billions in crypto moving from last cycle's wreckage that's now changing hands. If we survive this, it'll be the greatest thing for crypto, as all this looming overhang from massive players is dealt with and we can finally move on. Now let's add to all this, the risk of a broader conflict in the Middle East is escalating, with tensions between Israel, Iran, and militant groups like Hezbollah and Hamas. These tensions are impacting global oil prices and contributing to market instability. The Middle East is the largest producer of petroleum and oil, and since the US dollar dominance is mainly because of its oil trade, there will be consequences. Oil prices will further increase, leading to higher level of energy prices all over the world. This will lead to energy inflation and a slowdown in the tech industry. It will also lead to more inflation of the US dollar and contribute to even more inflation in the US economy. Then there's also the downfall in the tech industry. Intel has recently announced significant layoffs as part of a restructuring effort in response to declining demand and competitive pressure. This move highlights the broader challenges facing the tech industry. Nvidia stock has also come under scrutiny due to what some analysts consider overvaluation. Despite strong performance in the AI and graphics sectors, the current price action is unsustainable. You can see in our chart here from our Altcoin Buzz Alpha Market report all the possible scenarios that could affect the world and market. The most bullish scenario is that the US steps in and assures everyone markets will be fine, Iran completely backs down and World War III fears subside, rate cuts are announced, the Fed starts printing money, and crypto pumps. And while there are many great altcoin buying opportunities, it's very hard to say when will bottom because it's tied to the more global TradFi markets. So if you believe we'll be fine later this year, then it's a great level to buy any alt you think will come back, many of which are hitting new all-time lows. However, it may be too early to say as every hour the price continues to drop and drop with no buyers in sight. So for a better idea, we'll have to let you know later this week.